Hello, everyone, and welcome to the Note Assistance Program livecast. And today we are so excited to bring to you Mel Baptist. He is one of our pride and joys, I should say, one of our favorite vendors, especially when it comes to insurance. So if that strikes you as odd that I have a favorite insurance provider, welcome to the life of noting and becoming a note investor. And I hope to show you the joys of being a bank. Before we do, I wanted to spend some time to just let you know what's going on. As you know, I love to keep my clients in the know because networking is probably the biggest part to your success when it comes to note investing. So we're going to tell you about some of the up-and-coming events and then where you can find some resources and let you know who we've got speaking next before we introduce Mel. But definitely stick around. We've got some good people coming up. We've got Mel's tonight, excuse me, but we've got Matt Sorensen, one of the industry sweethearts as far as the note industry is concerned. He is an attorney, helps you with structuring your notes, so please come by and check us out there. That's going to be in September. You'll get an email blast if you're not on our mailing list. Please check out our website here. This is www.noteassistanceprogram.com. At the very top, we have a phone number as well of 855-541-6683. You can always give us a call or shoot us an email. The email is invest@noteassistanceprogram.com. I have a lovely executive assistant named Deidre who's very happy to take your calls and return them if by any chance you get a voicemail. But give us a call. We're all about some old-fashioned just communicating, not so much technology-driven, but really just hands-on communication is really what drives this program. I do want to introduce you to some of the resources that you're going to find on our website. If you look at this tab here, you're going to find a link to to nationwide attorney costs. That's usually a good thing for people who are looking to budget. So you can click here and it'll give you a list of the attorneys nationwide and where they, where they fall as far as their charging and everything. So you can look and get a window, if you will, of how much you should expect to pay. I can tell you right now, the Note Assistance Program, because of our volume, we're able to negotiate these prices, and we come in substantially less than the average, the nation average. But this is a great guideline for you to look at in respect to you finding an attorney to work on your notes locally. Another resource I'd love to show you is foreclosure timelines. This is a huge one. A lot of people strategically pick the areas that they invest in. And so if you're one of those people, this will help you realize one of my favorite states right here is Alabama. And as you can see, why it's 1 to 3 months. And, that's just really one of the things that's very effective and helpful when you're looking at notes, especially when you're new. It's all about getting your profit and your turnaround sooner than later. So picking states that have shorter foreclosure timelines is really a strategy that we employ here a lot. Let's see, what else do we have going on? We've got Mel. I'm going to actually be doing an event with Realty 411, so I just want to give them a shout. They've had an event here in Santa Monica this past weekend, and I'll be joining them in Melville, New York in September. But check them out. They are a magazine that's out there, Realty 411, and they also hold some very exciting expos. The other thing that I like to attend as well is Think Realty. They have events as well. They just had one up in San Francisco. So look up Think Realty. That's another resource for you as well. So resources are huge. Tune in when you can. We'll let you know where the next expos and things are going to be that we are going to be taking a part in. And again, we love to see you guys. So before I get to Mel, I just want to take you to some of the new and up and coming ventures that we have here at the Note Assistance Program. For those of you who are seasoned investors and do not need the assistance so much, but are just looking for an honest deal out there, a note with some meat on the bone, we've opened up our trade desk. It has not been blasted to the public, and nor will it be. It's a private trade desk, but should you qualify, and there's a short vetting process, to go directly to the trade desk, you're going to be able to have access to all of our notes. A lot of them are exclusive. We also have a good chunk of notes that you see out there all the time. So check out our desk because you just might get better pricing from us, as we are known to give direct pricing. We do have trade desk fees that we'll talk about. So we don't work for free, but we also don't pack the back of your notes and take all the profit out of it. So we do have some transparent trade desk fees that we'll share with you for those of you who are interested. and also able to take advantage of it based upon the experience that you have. But yeah, we're doing some very exciting things. The other thing I do want to share with you is not only the trade desk, excuse me, let me go back, but also something we've launched called the Buyers Club. We are literally in the beta stages of it right now. And by the time by the time 2017 rolls around, we will have it officially launched. But right now, we're going to have a Buyers Club that has a monthly fee in which you can get already vetted notes, and we'll send them to you. For that monthly fee, you'll get about 5 notes a month, and you will have everything, including the pro title report, my scouting report. Those of you who work with me know that I always get a local guy to do a scouting report, comps, tax assessor's value, all that good stuff that you need to make a decision, lickety split. So that's it for now. I do encourage you to reach out to us. Again, the number is 855-541-6683, especially regarding the trading desk. You know, if you're looking for a note life without bidding wars or lottery systems, just plain old fashioned first come, first serve and honest pricing and negotiations, this is a place for you. And we look forward to having you. Now, let's get to the main event. Today, I am very, very excited to introduce you guys to Mel Baptist. As I mentioned before, he and his brother own Ross Diversified Insurance. And if you're on this call, I really want to applaud you, because I always run into people all the time who are very excited about jumping into investments, but never stick around or show up to the conversations about the risk, right? And then many times, those are the same people who end up getting caught off guard with the risk. One of the things we pride ourselves here at the Notice Systems program is education and educating our investors. So none of our members have the opportunity to say, oh, they caught me off guard. We've spoken about most things. So it's your decision whether you want to act on these things or not. I highly suggest acting on insurance. I know a lot of you guys are curious, especially those who have not bought notes before. Well, how do we protect ourselves in the note industry? How do we do that as investors? So that's what he's going to talk about here. Feel free to enter the questions into the screen there at the bottom. I will bring them up to him and he will address them all. We've got about 45 minutes here with this guy, so pick his brain. And then I'm going to also allow him to give you some contact information. I encourage you to call him with your notes. He's very patient, otherwise he wouldn't be able to work with us here at the Notice Systems program. So we applaud him for that. And we definitely are excited to pass this referral source on to you. So without further ado, Mr. Baptist, welcome to the Notice Systems program, NAP Live. Tell us a little bit about yourself, how you got started, and how you got into insurance out of all things.
Well, good evening, everyone. Welcome to Mel's Happy Hour. Ross Diversified Insurance, my brother and myself, we're a national insurance agency, and we work with about 300 lending institutions and private investors throughout the country. We've been doing this, I hate to admit it, but 1986, so we're entering our 30th year in business. And we work primarily with private investors, small LLCs, hedge funds, as well as credit unions, banks on the insurance end. And that's what tonight's all about, is to try and increase everybody's awareness when it comes to insurance. You guys have a checklist when you're buying a note, and a lot of times insurance just isn't the top of that checklist. And so tonight's my purpose is really just to increase your awareness on some of the exposures and some of the things that you need to be salient of when it comes to protecting your investment with insurance. So that said, I guess I'll just lead right into it, Jasmine, unless you want to.
Yeah, no, I just wanted to encourage everyone again to pay attention and ask questions. You know, Mel has enlightened me so much. One of the things I'm going to make sure you get to is the contract for deed versus the mortgage. A lot of us, I wasn't aware, and we get a lot of misinformation, not intentional, of course, but a lot of us aren't aware that you should get different coverage for depending on what asset you have. So you can buy a note that will have a contract for deed on it, or have an actual old school mortgage on it. And depending upon which one, what type of paper you have, depends on what type of coverage you're going to have. And I got to tell you, the thing that can cost you and really keep you from being a successful note investor is finding out at the last minute that you have the wrong coverage. Would you agree?
Absolutely, absolutely. And that's part of what tonight's all about is, I can challenge anybody who has a homeowner's insurance. You buy your homeowner's insurance from Farmers or Allstate or whoever your local agent is, And I can bet pretty much for sure that nobody reads their insurance policy unless they have a claim. Then they grab that insurance policy out and they go through it line by line, paragraph by paragraph, with the yellow highlighter saying, this give it to me, and this paragraph took it away. So, excuse me. So what I'm trying to do tonight is tell you a little bit of what actually are covered, and more important, what's not covered when it pertains to insurance, and an overall picture of insurance and with note investing. And I'll just jump right into it. Primarily, we do a lot of what is called lenders placed insurance, and lenders placed insurance simply means that the lender is placing insurance on a note that the borrower or the homeowner has failed to place insurance and protect the lender's interest. So lender's loss payable insurance is a program in which the lender now can put insurance on that property to protect himself. When we talk about lender's insurance, the lender is the loss payable person in charge of that insurance policy, meaning that any claim, any payment, any cancellation all goes through that lender. When typically a lender purchases a loan, he's going through a file that might or might not be complete as far as what he has in his documents, but he needs to find out if the borrower has an insurance policy. And if the borrower does have an insurance policy with the Farmers or an Allstate or wherever, then the lender needs to be named on that policy. And the first point is, how do we name that person on that policy? And what we do is we name them with a lender's loss payable endorsement, and a lot of times it's called a 438 BFU. And what this is it's if I'm the borrower, Mel Baptist, and Jasmine has the note on it, Jasmine wants to be listed as the lender's loss payable endorsement on that policy that I have with Farmers or whoever. What that does is it gives the lender rights that keep them separate from what the borrower has. So for example, on a Farmer's policy, if I'm an additional insured, then I have the same rights as that homeowner. But if the homeowner burns his home down in an arson claim, well, he's not protected if he burns his own home down. If you're an additional insured, then you have exactly what he has, which is no coverage. So what protects the lender, whether it's a big bank, Bank of America, Wells Fargo, they get what is called a lender's loss payable endorsement. And that gives them special rights that the homeowner doesn't have, and it's primarily pertaining to whether that homeowner damages his own property, and then you're protected on that policy. So it's very important, first off, in your due diligence is to find out, one, if there is a policy there, and then two, if there is a policy there, then you need to contact that agent, unless the borrower is cooperative with you and working with you, to get yourself listed as a loss payable endorsement on that policy. Now, if you don't have a policy on that particular note, then there's two categories I'm going to touch. One is a note that you're just purchasing, either a non-performing or a performing note, and then the second is a land contract. And I'll leave the land contract off for just a couple minutes here and get specifically into the lender's loss payable forced order insurance policy if you have a borrower in there that has let his insurance lapse and he's not cooperating and you're having to force place. First off, I want to separate a couple of things. One is the dollars that you buy that note for, and we'll just use an example that you bought a note $100,000 and maybe you paid $50,000 for it, maybe you paid $100,000 for it, whatever you bought that note for, and whatever the value of that property is, has nothing to do with the insurance policy. The insurance policy is tied strictly to the collateral, which is the structure on that property. So for example, if I have 1,000 square feet a structure at $100 a square foot, well, that's real easy. That's a $100,000 policy for that structure to protect that structure. So if I have land that's worth maybe $300,000 and I have that $100,000 structure on it, so I have a total market value of maybe $400,000, and maybe I purchased that note for $200,000 because I'm 50% LTV on it. That's a good investment, but it does me no good to insure that note for $200,000 with forced order insurance, because in the event of a loss, we're not going to pay more than the value of that structure. So all insurance is, the purpose of all insurance is strictly to make you whole prior to what you were before the loss. So if the structure burns down, then you have enough money to replace that structure. So in determining what the coverage amount that you're going to want to tie it to the structure, the value of that structure, and then insure your structure for that amount of money. Then you're protecting that collateral so that if the property burns down, you're in the exact same shoes you were prior to the loss. You can be made whole with that lender's loss payable endorsement or your forced order insurance policy. And that is primarily what you need to be focused. Secondly, you need to be focused on whose responsibility is that. If it's your chips and you made the investment, then you need to make sure that you're on there. Now, you might work with a servicer who perhaps will take care of that on your behalf, and there's different servicers out there that have different programs, but you need to be proactive with your own. Nobody's going to watch the investment like it's your own, and nobody's going to follow up with it. And it's most important to do that right when you're purchasing that note, so you're on top of it day one.
Right, and I just step in real quick and reiterate the importance of that. And that's something that, for those of you who happen to be Note Assistance Program clients, this is not the first time you've heard of that, right? We trust but verify. We always, in our program, we get attorneys as well because, again, yes, services offer a la carte services, but as he says, not only with your insurance, but with your workouts as well, no one's going to work that note out like you do. And so realistically, if you're buying this as an investment and you're a smaller investor, not a big hedge fund that has people working the fund for you, or should I say where you have substantial gains that you can take a few dings, then it's very important that you on the front end. And that's why I'm excited that you guys are here for this call. But again, you don't want to trust anyone to do anything, especially with the insurance. I've had some issues myself. And so he's going to talk to you about it. But insurance is one thing you want to make sure you have covered. So do reach out to people like Mel, even if you think you are being covered. But let's just have a quick review of what you got there to make sure that you are covered correctly.
Exactly. So
sorry to interrupt.
I'm sorry. No, I was going to say you're exactly right. And again, nobody watches your wallet better than you watching your wallet. And these notes are your dollars, so you need to protect them like it's your wallet. When it comes to the insurance, you need to know that you're listed, or you need to force place it. You need to know the date that you force place it and the date of that expiration. If it's a regular standard insurance policy from Farmers, you need to know the expiration of that date, and you need to track that insurance. Once you're listed as a loss payable endorsee on the policy with a Farmers or an Allstate, then they have an obligation to notify you in case of a cancellation or it expiring. If you're not on as a loss payable endorsement, then they have no duty to notify you. And that's why that you have to kind of play that FBI agent at the initial inception of your loan to make sure that you're on there for that insurance tracking.
Right, and let's take a minute and pause real quick, because I think you mentioned something that I found to be cause some agita, if you will, to clients. So if you're not listed as a loss payee, how difficult is it for you to get some communication?
Well, typically, that's the FBI agent part of this whole job that's a pain in the behind, to be quite honest with you. Because typically, and let's just call it like it is, if it's a non-performing note, typically insurance and taxes are indicators that they're not paying their mortgage, and they're not paying their insurance, and they're not paying their taxes. So they kind of go hand in hand. But you need to, again, if the borrower is not cooperating with you and he's not, there's no communication between you and the borrower, then you have to take the assumption that there's no insurance in place, and you have to be proactive and force place on your own.
Right, and but also in addition to that, I did want to make sure everyone understood that it's important that you put yourself as a loss payee or your company, that you represent them, because if you call in trying to find out if there's insurance on the house and you can't prove that you should have access to this information, it's really hard to get it. So it's very important to do that as well, and I'll let him finish addressing that. Thank you.
Yeah, so again, if you're not listed on a policy, you have no ownership to that policy. That house burns down, your interest, and let's say the borrower is listed on there and he gets paid off this $100,000 in the example we're using earlier, you have no rights to that money because you're not listed on that policy. So you need to take the onus on yourself initially. If you don't have communication, if the borrower does not list you as a loss payable on that policy, then you need to just be proactive and force place to protect yourself.
Right, and the key taking notes is going to be the loss payee, is what you want to write down. You want to be listed. I said the key word there, if they're taking notes, is loss payee. they want to write down that they are listed as a loss payee, correct?
The keynote here is lender's loss payable endorsement. Again, I'll repeat that. Lender's loss payable endorsement. An old term that a lot of insurance companies still use is called the BFU, 438 BFU. So again, lender's loss payable endorsement, or also known as the 438 BFU. And that's typically what you're going to want to be named at. And again, that gives you rights separate to the owner of the home, specifically when we're talking to arson, those type of claims. If I'm the owner of the home and I do damage to that home myself, started on fire, I don't have an insurance claim with my own insurance company. As a lender, I stand separately in an island away from the borrower, and my rights are protected separately. If I was just an additional insured on his policy, I don't have that. So you don't want to be called an additional insured on Mel's policy. You want to be called a lender's loss payable endorsement 438 BFU. It's very important on insurance policies that you obtain.
Wonderful, wonderful. Thanks for taking the time to be specific with that, because those are the devil's always in the details.
Absolutely. Now let's kind of move on to coverages. Specifically with lender's loss payable endorsements and the forced order insurance policy, you're protecting that structure, that asset, and that's all that we're really talking about. What coverage do we afford on lender's loss payable endorsement? The program is such written in a way where there's no underwriting. We can write anytime, anywhere, in any state. And what we're covering for is primarily for fire damage. We also cover theft. Now, the theft is of components of fixtures in the structure, so we are not covering any contents whatsoever. But if someone comes in and rips out the kitchen cabinets or rips out a toilet and is more a theft, and it's a very gray area between theft and vandalism, and we cover both. You know, it was explained to me once, if someone goes into a house, and believe me, we saw a lot of houses being trashed during the subprime crisis. We worked with a lot of major subprime lenders, and so we saw a lot of REO claims where people would come in. If, let's say, they rip the toilet out and they leave it in the living room, that's a vandalism claim. Let's say they rip that toilet out and take it across the street, now you have a theft claim. So vandalism, malicious mischief, arson obviously being the big one that I mentioned earlier, those are the major components that we're covering when it comes to forced order insurance. We're specifically covering anything to do with mold. We're excluding anything to do with landslide, an earthquake. I'm here in California, so earthquake is not covered. And
Please,
flood insurance.
Mold, right? You said you're not including mold. Is that what you said?
I'm saying I'm not. That mold is not covered.
Thank you. Okay.
And landslide or earthquake are not covered. And most importantly, as we're seeing what's going on in Louisiana right now, and our phone's been ringing off the wall, is flood insurance is not covered. Now, we will force place for flood insurance or write flood insurance to the National Flood Insurance Program. Both, we have both programs available, but flood is a completely separate property, so a completely separate policy. So if, for example, if you're in Louisiana right now and you don't have flood insurance and you're being flooded out, your forced order or your regular homeowner's insurance is not going to cover you for flood. So it's very important if you're buying notes in Florida or in the Gulf states, in Texas, along the Gulf, in the states that you're prone to have flood, it makes a lot of sense to get a flood certificate, which will tell you what flood zone it's in, and our office would be happy to accommodate you for that. We can do a flood cert for you for pretty much free. And if you're in a flood zone, then we'd be happy to quote that. The flood insurance is regulated on the pricing by FEMA in the National Flood Insurance Program. The forced order, our rates are fairly standard for different states. They're a little higher. For example, Florida, the rates are a little bit higher than they are for California and Arizona and things like that.
Question. I noticed that you said you have a separate policy for flooding, so meaning you can get coverage for that. However, you'd have to ask for a separate policy. Does that hold true for the other things you discussed, the mold and the earthquake and all the other things like sinkholes? I know there's sinkholes in Florida.
Yeah, the sinkholes, and that's excluded. And typically, we're excluding this on our forced order, so it's not something that we will write at all. We'll write flood insurance, but we won't write earthquake insurance. We won't write the sinkholes is an exclusion, mold is an exclusion. And typically you'll find that those exclusions are in the homeowner's policy, the farmers or the Allstates. If the homeowner does have those type of policies, they're typically excluded as well. So you don't have protection for those type of disasters.
All right, well, let me squeeze in a question here. Looks like we got a question. It says, how do you find out if the borrower has insurance? And that's coming from Santa Clara.
Unfortunately, you only have the avenue of your paper file from whatever you're getting with your loan package when you're purchasing that note, and most important, direct communication with that borrower. So if you have a borrower or you have a house that's vacant, you can assume it doesn't have insurance on it. And let me just take that for example. So there is an unknown here, and let's say I'm buying a note and I don't know, and the borrower is not going to return any of my calls, and I've knocked on the door, I had a door service knock on his home, and nobody's going to communicate. So I don't know what I have there. In a case like that, I'm going to force place insurance and I'm going to protect my interest. Just so you know how we work here as far as the premiums, when you force place insurance with our company, we charge you an annual premium, a 1-year premium, and it's based on the geographical location and the coverage amount. So for example, Florida is going to be more expensive than California. $100,000 of coverage is going to be more expensive than $50,000 of coverage. So I place that coverage of, let's just say, $100,000 on this particular home. I don't know if they have insurance or not. They're not cooperating with me. If it's a owner-occupied home, I can send out 2 letters. They're CFPB letters, which is the Consumer Fraud Protection Bureau. And if it's today's August 23rd, if I take that note and I buy it, I place the coverage on August 23rd because I don't know if I have coverage or not. Nobody's giving me a policy and listing me on it, so I'm taking the assumption that I have no coverage. I place it on August 23rd. I send out letter number 1, which is the CFPB letter, which we can give you the samples of those letters. That's all from the Dodd-Frank regulations. And you send out letter number 1 to that borrower, which basically tells them what you've done. It tells them what's not covered. It's a very negative type of letter asking them to please furnish you with a policy. On September 23rd, you send out letter number 2. Again, a CFPB letters. It's dictated the language and the body of the letter. And on September 23rd, after you send out that letter, you're then allowed to add that to the borrower's balance. Now that borrower comes in December and he's finally communicating with you and he's even going to pay you off, yet there's a $1,000 charge, let's just say, for forced order insurance that you placed back in August. Our company is going to ask proof of that insurance, and we will go back and we will flat cancel that policy, and less a $50 processing fee that we charge, you'll get 100% refund on anything that has insurance in force. So if the borrower's a good person, they have insurance, but for whatever reason they chose not to communicate with you, you still have an avenue to get 100% refund on that forced place. If there is a lapse in coverage, we will cancel insurance on a pro rata basis. So if, let's say, they got insurance in September, but they didn't have it August 23rd when you put the insurance in force, then we would charge you for the number of days. There's no rule of 78 or a short rate or minimum earned fee. It's strictly 100% pro rata, less the $50 policy fee that we're charging you. So that's all you're out if, per se, the borrower does have insurance and he furnishes it after the fact, which typically you find out if let's say, the borrower, you get them performing and maybe they're going to refinance and pay you off, and they actually having some communication with you, then that's something that we can facilitate a cancellation and a pro rata refund or a flat cancel.
Wonderful. Thank you very much.
So when you get set up with our company, what we do is we go through, and I'm not going to go through it now. I was going to put it on the screen, but I think it's better to do it individually. Is you'd email our office, you'd say, Mel, I just bought this note in Indiana, and I don't know if it has insurance or not. I have a BPO on the property. It's an old 30-year structure that's, you know, maybe worth $60,000, $70,000. I want to place insurance on that. What we do is we set you up with what we call a master policy setup, where we are setting up whatever the entity is that you're buying the note from. So for example, if it's Mel Baptist as a single person, or if it's Mel's LLC, or if it's Mel's IRA, these are all different vehicles that people purchase notes with, and we will set you up with a master policy with that entity. In that setup process, we're going to go through a whole list of the exclusions that I listed, just a few of the big ones, the earthquake and the flood insurance and the landslide and the mold, and you'll sign off on all the exclusions, because when it comes to a claim, we want you to know what you have prior to the loss, not before, so that if you're going to file a claim on this property in 6 months, there's no surprises as to what's covered, the perils that I discussed, and more important, what's not. We also go through the deductibles and how much the deductibles are, and then we go through you know, the setup process. It takes, we email you these attachments, we find out a little bit about yourself, you get that back to us. It usually takes us a couple hours to get your setup process complete. There's no cost or fees. And then once that setup process is complete, we will then generate an order form, so that if you need to force place insurance on 123 Elm Street for $50,000, you have a quote, and then we quote that the very same day as well. And it's all math, but the states are different, so we can quote usually in a matter of minutes, and then you know exactly what you have, and you can force place with our office, you know, as soon as you get that note, if you need to force place for the insurance amount. So the real benefit of this program is there's no underwriting. If you're going to call me at Friday, which typically our phones are more busy on Fridays at 3 o'clock than they are on Monday mornings, we're going to be able to give you a quote. We're going to help facilitate your forced order need at the time that you're calling us, and get that all complete. As fast as you want to go, we can go just as fast. And the no underwriting allows us, again, to insure anything, anywhere. Now, I will bring this up.
I can attest to that real quick. I just wanted to say about your turnaround. And I think now would be a good time just to give everyone a quick blast of your email and the phone number, how they can contact you. But I just wanted to definitely say that I've sent people to him, and we've got coverage within 48 hours. And then, you know, and then other people may take a little longer to get the check, but they are poised for action.
Yeah.
Yeah, tell them how to contact you.
I'm sorry, I was going to say, some people want it right this second. They want to pay us with a credit card. I will put in that we do accept credit cards, but on credit cards, and it's not Ross Diversified, but it's a 3% charge from the credit card company that is non-refundable if you want to pay us with a credit card. Some people just want to get it handled that quickly and do it. But if you need coverage placed and you actually email us a copy of the check, we'll usually effective that date, the day that we're actually facilitating the policy, which would be on August 23rd if it was today. So I just want to also let you know, because it's going on in Louisiana right now, and we get bulletins as well. So for example, I mentioned earlier that we sell flood insurance policies. I want to bring this up, is right now, if you have a named storm coming through a certain area, we're not going to be able to insure you for a flood. So if you're in Florida and all of a sudden a hurricane's coming and it's a named hurricane, and you say, well, wow, I better get some flood insurance right away, we're going to say, sorry, there's a moratorium and there's a named storm. And those are FEMA rules. They actually did that about, I think it was 1997, 1998, where nobody was buying any flood insurance. And I think it was in, I want to say Missouri, or a state, I think it was Missouri, and they ended up putting this new law in that Congress installed, which basically says they won't insure a flood.
I can attest to that. No one wants insurance until they need it, right? I can attest to that. Give them your phone number and an email real quick, and then let's keep going. Yeah.
Absolutely. My phone number is 1-800-210-7677, which spells Ross. Again, 1-800-210-7677. And my email is BABTKIS, Mel Baptist, so it's mbaptist at Ross, ROSS, the numeric 2.com. And I'm pretty good. I have this trusty cell phone, and so this is a 24-hour, 7-day-a-week cell phone, because I understand that a lot of investors have day jobs, and this might be something that they do separately. So if you call me on Saturday afternoon or Sunday evening, I'm going to get back to you or answer that call Saturday or Sunday afternoon. We really understand that now means now, and that's when you need us. So we try to stick out our chests and jump whenever our phones are called, and that's both myself and my brother Ed. who again run Ross Diversified. Tell you a little bit about our staff. Bruce Young, who's been with us 23 years. Shelly Hisaki, who's been with us 27 years. And Jennifer, who's with us 19 years. And our new member, Sarah, has been with us about a year, but her mom retired from our company. So it's a small company. We work very closely with our customers, and we take pride in trying to answer the phone on the very first ring.
Yeah, and you know, I have another question here, but let me just say this. You guys who've known the program, the Notice Systems program, for long enough, you know we affiliate ourselves with people with this type of experience for one reason and one reason only. So it's, you know, I don't know who else is out there, but compare experience, especially when it comes to insurance, because that's the most trickiest thing about note investing. Once you get the rest of it down pat, it's kind of systematic. But you know, insurance things are changing. He already mentioned, you know, changes from 87 to just recently, and how you can't call in the middle of a storm. And most of us assume that piece, but this is an ever-changing world there with the insurance. And these are the guys who can talk to you about precedents, because they were there 10 years ago, and actually make things make sense. I like to say they talk in crown for us. So makes it very, very easy for us to hear. So definitely reach out to them. I do have a question here, and this is actually a good one I wanted you to address as well. But we've got a gentleman from San Diego saying, can you talk to me about preventive issues for to reduce my chance of getting my claim rejected?
Absolutely.
And so I remember you telling me some things about drive-bys, but yes, please address.
Great question, and one of the most important questions when it comes to having a claim. Documentation is the most important fact, and the easiest documentation, which is the easy claims, is it's a fire. You call the fire department. There's a fire report, date of the accident, and it's real easy because it's cut and dry. But date of discovery and date of loss can be two different things, and what you need to do is you need to be on top of it, especially when we're talking about vacant properties, abandoned properties, and nothing speaks louder than pictures. To document your property, and let's say I'm in Southern California here, but I'm buying a property in Indiana. I'm sure there's a local realtor that might want to work with me with a listing or a rental, depending on my my game plan, and you want them to go out there, you want them to take pictures. Typically what happens in the event of a claim is you call it in, and an adjuster comes out to that property, and the adjusters are all independent adjusters, and unbeknownst to most people, most adjusters are paid more money the higher the claim is. So their motivation is to read the policy language and then to adjust the claim fairly. So the contact person who with that adjuster in that very first meeting is very important, to have the right person meet that adjuster at the property and go through the property and explain the narrative of, we bought this property on August 23rd. These are the pictures that we had. Sometimes you can't get into the property, so you take as many pictures from the outside as you can. The minute you get in the property, you document exactly what you have. Especially important if you're going in and you're rehabbing a property, and you put in a new kitchen, you put in some new flooring, some new kitchen cabinets. Those are the type of improvements that you want to document. You want to show that, so that in the event of a claim, you have a clear record. And it's the same thing on your homeowner's insurance as well. If you have a homeowner's insurance claim, the adjuster's going to come out. You're going to want to make sure that you know, not control the narrative. That's the wrong way to say it, but you want to make sure that you're giving a clear picture of what was here and what my damage was. If it's a vandalism claim, then you immediately want to call and you want to file a police report, and you want to have the documentation of your either your fire report or your police report, and have as many pictures as possible. If it's a vacant property and you have a strategy to get into that property, and maybe it's going to take you a little while, then again, you want to have one of those services that go out and take pictures and even knock on doors the best you can. Speaking of vacant properties, this would be really a good time to bring up the second part of the forced order insurance program, which is what we call the REO insurance program, which means real estate owned. It's the term. And the difference between a real estate owned property and a forced order is, on a real estate owned, you are the owner of record. It is your property. You might still have to go through an eviction process to get some old borrowers or tenants out of that property, but you're the owner of record. Where this is very, very, very important is because you have liability exposure. If someone gets hurt on that property, they now sue you. When you're just a note holder and you're not the owner of record, then if someone gets hurt on that property, you have no exposure. So the difference between the forced order insurance program and the REO insurance program is the REO insurance program, regardless of the amount of fire coverage you have, has $1 million worth of liability that goes along with it. So if I have $100,000 worth of fire coverage, I have $1 million of liability. If I have $50,000 worth of fire coverage, I have that same $1 million. And that's protecting you in case someone gets hurt on the property. It specifically excludes if you're going to have workers on that property. So if you're having a contractor go in and fix that property up, and that's part of the exclusions we go through on our exclusion page on REOs, but if someone's going to work on that property on your behalf, that does not carry, that same liability does not carry forward. They need to have their own workman's comp if they're getting hurt on the job for that type of an exposure. So the REO insurance, and I've brought this up with Jasmine, and we spoke about it on some prior discussions. And I'm not an attorney, so I give that disclosure. And different states have different rules, but we consider land contracts where they are actually, you are actually the owner of the property. A lot of people use the land contract vehicle because it helps speed up a foreclosure process. But whatever your motives for using that land contract are, we consider you having a land contract as you being the owner of the property. So if you're buying someone's land contract, then you're the owner of record, then you have that exposure that I'm speaking to, and you want to have an REO insurance policy as opposed to a forced order insurance policy. The difference in cost is not that much. And that $1 million of liability coverage is really your sleep at night, and you work very hard to save these chips to make these investments, and you don't want to lose it with something silly, with a lawsuit that's all of a sudden throwing you back because you're all of a sudden defending yourself because someone got hurt on the property and you had that legal exposure.
No, great, and that's so important. So just to make sure everyone's able to extract what they need to, it's very important to find out when you're buying the note. If you are buying a contract for deed, also known as a land contract or an installment contract, do not be misled by those terms. You do need different insurance than if you're actually buying a mortgage. And again, that's part of the educational process here at the Note Assistance Program. But again, you do not have to come here for that. Mel, that's why I'm sharing my resources with you. So Mel's a good person to help you with that. Because this is where a lot of people have lost their shirts, where they thought they were covered and they don't have the proper insurance, and only to find out in the end. And so insurance is a huge part of our exit strategies and our safety nets as banks and lenders, if you will. So that's why, just to take a moment to bring attention to those differences, do check into that. And if you have any questions on where to find that information, you can always give me a call at 855-541-6683. That's 855-541-6683. So we've got about another 15 or so minutes here. Mel, I didn't know if you had any specific things you wanted to touch base on. I did have another question or so, but I wanted to make sure you got to the end of your presentation.
Well, I just wanted to say, again, my brother and I have been doing this for a very long time. And if you call us up and you got, 28,000 loans, we're going to love to present a program to you and give you the very best service. On that same note, I've been doing this for 30 years, and I respect people when they're putting their hard-earned money into an investment. If you're buying your very first note of 8 or 10 grand and you don't have any experience, you call me, I'm going to pick up that phone, and I'm going to make sure that you have a good understanding of exactly what we're providing and exactly the services that we're offering to help protect your investment. So what I'm saying is, it doesn't matter if you have one note or you have 28,000 notes. We're going to give you the very same service and make sure that we address every question. And believe me, I prefer to answer 100 questions on the front side rather than dealing with questions once you have a claim. I want you, when you have a claim or you have a problem, that you have a real good understanding of exactly what you have, and more important, what you don't have. The only other part that I wanted to present to you today was that we have this conveyor belt of insurance products, as I've explained: the forced order insurance, the REO insurance, A third leg of that conveyor belt that Ross Diversified offers is a more comprehensive program for someone who's actually going to rent that house out or fix it and rent it out. So let's say you're buying that land contract, you've evicted your tenant, and now you're going to put $10, $15, $20,000, whatever the number is, into that property and try and rent it or sell it, whatever your strategy is. We have a program where we work with flippers who are doing, again, not tearing down the house, but doing cosmetic work and some minor repair. It's a mini builder's risk policy that protects you in case you have $20,000 of lumber on the front lawn and it burns. Those type of programs we have, we ask a few more questions than just property address and coverage amount, but it's a policy that it's very, very competitive price with the farmers of the all states. But let's say you have a property in Georgia and one in Tennessee and one in Florida, and you decide, you know what, I want to rent these properties out, I want to keep them in my portfolio, then it's a very competitive renter's insurance for the investor, not for the renter. Again, we're not insuring the contents, but for that landlord-tenant type of policy, we have that, and we are very, very efficient at getting you quotes and being able to coverage within a couple of days on those type of properties. So if we know you're closing an escrow, we can work with the escrow company, the closing officer. If you're going to leverage up on that investment and you have a loan against that property, then we can work with the lender for their lender's loss payable endorsement.
Excellent, excellent. Wonderful resource. I've got this last question here. Looks like we got someone east of the Mississippi calling, tuning in from Alabama. They're just curious about the REO insurance. If they have a contract for deed and they get that insurance, do they now need to get a different policy once they foreclose on the property and actually take possession of it? Or is there now a third a piece of insurance that they may need?
Well, what I just was talking about was our renters program, and it really depends on their exit strategy on that property. So let's say I foreclose on a property in Alabama, and it's a property I'm going to evict a tenant, or let's just say it's vacant as is, and I'm not going to do anything to that property. I'm going to just sell it as is. In that case, the REO insurance would be the right vehicle to have, the right insurance vehicle to have on that property until you complete your sale, so you're protected. However,
so that's a different policy than the one that they had for the contract for deed then, so they would want to...
No, I'm sorry. It's the same policy as you had for that land contract of deed, as you're calling it. That REO insurance policy would stay with the property until you have a strategy. If you're going to say, I'm going to put $20,000 into this house and rehab it and either sell it or I'm going to rent it out, that's when you would change to a different policy. As it stands as an REO in that status right there, and let's say you're selling it as is, or you're just doing a $1,000 cleanup and selling the property and you have it listed, then the REO policy will be a valid policy to stay on there until the time that you actually sell the property.
And if didn't I tell you guys he was extremely patient? I really appreciate you taking the time again. Give him another way that they could contact you once again, please.
Sure, it's Mel Bapkus. Ross Diversified Insurance. You can ask for either Mel or Ed, same last name. And Bruce Young, also at our office, is able to and has the same amount of patience as the Bapkus brothers. Our number is 1-800-210-7677, which spells Ross. Again, 1-800-210-7677. And my email address, mbapkis, BABTKIS, at ROSS2.com. So again, mbapkis@ross2.com, and I'll be more than happy. I return calls as soon as I get them. So if you have a question or something pops up 2 days from now when you're thinking about this, don't hesitate. I really advocate that you ask the tiny baby's questions. We want to make sure that you really have a good understanding of what you got as well as what you don't have.
Right, and in that email, I just want to bring up, it's the number 2 at the end, just in case you get any bounce backs. But if you have any problems, you can always contact us here at the Notice Systems Program, 855-541-6683. And Deidre will be happy to pass on the referral for you again. Thanks so much for those who attended. This will definitely be archived, so you can go ahead and spread the word, even review this if you need to rewind and take some notes. But definitely, We will be here next month with the attorney, Matt Sorensen. So tune in then if you have any questions about structuring your entity before you get into the notes. But in the meantime, we want to thank Mel again for coming by and Ross Diversified for having us. Have a great night. Thanks again from the Note Assistance Program. You're watching the NAP Live. Take care.
Good night, everyone.
Good night.